Good afternoon, everyone. Welcome to Stock Talk Thursday. I'm excited to be with you guys here December 9th. And I got a good bit to talk about today, but we won't take up too much of your time. And before we jump in, something I need to mention, I need to apologize to everybody because you know what? I missed your comments last week. There are some great comments and questions put in there last week, and I completely missed them, and I'll tell you why. So on my setup, I can see one or the other thing. So I was looking at my charts the whole time while I was just talking, but I couldn't see all your comments because that was on a different thing. But you know what? I've got a different setup now. I can see your comments on a different screen here, so it's all good to go. So please throw those comments in there, throw those questions in there. Love to have this be an interactive thing. So if you got some of those questions from last week that you did not get answered, throw those in there. I'd love to cover that for you. I know there were some questions about drawing lines on the new platform and everything, so love to go ahead and help out with that. Anyways, let's do a real quick recap from last week. I want to go over our hot stocks or it was one hot stock, one not stock, and I want to see how those have been performing over the last week since we went over them. And I'm going to go ahead and share my screen. There we go. All right, you should be seeing my charts by Tradeway screen. So I'm going to go over, and last week our hot stock was Home Depot. So I just want to take a quick look at that and see how it's been performing. And I got some interesting lines up here. There we go. That should get rid of those lines. There we go. So the hot stock last week was Home Depot, and you know what? While it's not necessarily racing up right now, it's still pretty hot. It stayed above the 10-day EMA the whole time, so it's been holding its own, just like I was talking about last week. It's right at about the 5-day right now, so you know it's cooled off a little bit. I was thinking maybe it would push up a bit. I know the market has, and Home Depot hasn't, so it's kind of cooled off, but it's still holding its own. Want to look at Twitter from last week. Remember, that was our not stock. It got crushed during earnings over and over. The CEO had just resigned. It was just down. And I was looking at it the other day, and look at that. For over a month here, it was staying below the 5-day. It just could not catch a break. It opened higher one day and then just got slammed down. That was the day that the CEO quit for whatever reason. And then had some movement upwards, broke through the 10-day, and is now sitting right below the 20-day. So potentially, it's just a guess right here, potentially Twitter had some value investors come in and buy the stock because they realized, you know what? In the last year, if I zoom out to a year here, it's been up at $80. And now, I mean, it just touched almost $40. So it's half the value of what it was earlier this year. Maybe now is a good time to jump in and get a good deal, get a bargain as if it's on sale, because it very well could come up and play in this area. It seems to like to play in the $60 to $70 range right there. So just a guess there, but that was last week, and I want to talk about a few things this week. So again, guys, if you've got questions or you got comments, go ahead and throw them in there. Love to interact. I believe I am seeing the comments there. So let's look at what the market has been doing, and then we're going to jump into this week's hot stock and not hot stock. All right, so we've got, you remember I had talked last week about this whipsaw action. The market was down, up, down, and then one day it was up and down, and then it was up again, then down again, then up again. And all of a sudden had this breakout, and it ripped to the upside. Now, if you can see back on my chart just a little bit, this candle right here looks a whole lot like this candle back on October 14th. And, about a month before that time, we had some selling pressure, and it would look like we were about to establish in a downtrend. And then out of nowhere, just ripped up, and it just kept going up. Now, we already have a little bit of pullback going on now, so I don't think we're going to have that same rip up. But an interesting thing here, and I'm going to show this on the platform. I can just drop in a horizontal line right there. And you can see how we ran up there and we pulled back. We tested it again. Now we had a deeper pullback, and we've come up and we're getting up pretty close to that again. So we are testing those all-time highs. We are testing the resistance level. And kind of a question is, are we going to make a triple top there and start to head down? If we do, it could very well start moving down pretty quickly. Or are we going to break that all-time high like it seems like we've done over and over and over again the last year, and just start pushing up more and more and more? So we'll have to wait and see for the next few days. But from a trader's perspective, it's tough to get into trades right now. We got the Fed announcement next week. Things are just still kind of volatile. We're actually, in Tradeway, we're in what we call a squirrel market. So it's just kind of squirrely. So we're going to need to have some more information, get some more clarification, and just we need the market to show its hand a little bit more to see, is it wanting to go up or is it wanting to go down? Because it's right up at resistance, but it may not be done going down. We'll just have to wait and see. That's our quick market overview. Let's take a look and see what our hot stock is of this day. I actually had the wrong one in there. Today, our hot stock is Apple. And you can see it's just been going up and up and up and up. We just looked at the market, and the market had that deeper pullback down to about the 100-day. And no one told Apple. Apple is just kind of racing up like nothing's happening. It did touch the 20-day exponential moving average down here, and then kept ripping up from there. So Apple's been not only hot of the last few weeks, but let's zoom out here for the year. It's just been uptrending. I mean, remember what an uptrend is, folks. We're talking about higher highs and higher lows. So we have a low there, a high, and now we have a higher low, and a higher high, higher low, and it keeps going up. And here's how hot Apple is. Let's try and throw a line on here, right? So if I want to throw a good uptrend line, maybe I try that, and I'm like, well, no, it maybe needs to be up here, but I'm trying to get this area right down here. So maybe I'll try. Oops. Let's just grab that line. We'll start it right there, and then I'm going to pull it, and I can get it here, but now it's just going up above there, and it's kind of, I don't know what happened with the chart. Let's reset zoom. There we go. Quick, easy button. So it's almost hard to put a consistent uptrend support line on there because it is that hot. It doesn't want to follow a very consistent linear progression. It's almost more of an exponential move up where it just keeps wanting to go up. Now, that's definitely not a recommendation to say, go out and buy Apple. Like that's definitely not what I'm getting at. Because, we look at Apple today, and that's not, let me zoom in here. That's for me, that's not at a good buy point. I want to see it come down and maybe bounce off of a moving average or support line before I want to buy. I don't want to just jump in right now because it's pretty far extended. I mean, in the last 2 months has gone up since from this low right here up to here. That's 28% move. So that's pretty sizable. It's definitely been pretty strong. And Apple, we all know about Apple, right? Super strong company. And for the better part of the last 20 years, it's just been up and up and up. It's definitely been one of the hottest stocks of the last 2 decades. If you were to look at the whole last 20 years, I mean, remember it was early 2000s. It's trading somewhere around like $2 or $3 a share, $2 or $3, and right now it's up at $174 a share. But that's not even all. It's gone through multiple stock splits. The last one being a 7-to-1 stock split. So if that last stock split had not happened, instead of the price being 174, it would be 7 times that. That's what, $1,500 or something. I'm not even gonna pull the calculator out and do the math. It's just crazy, stupid high. And that wasn't even the only stock split it did. So Apple, it's been hot recently. It's been hot over the last few years. It's been hot over the last couple decades. So that is our hot stock for today. Let's take a look at what's not hot. And for that, the winner is going to be RNG. Let me get this guy off. There we go. Let's talk a little bit about RNG, Ring Central. They are a business communication services. They do phone, video, meetings, probably competitor Zoom, basically. And they have been not hot. Let's zoom out to the last year. So you look at the last year, it's been kind of downtrending, right? I mean, they had a high up here back in February, March area, about $450. Today, they closed at $186. So they've just been moving down during a COVID time where things really should have been moving up for them. During a hot bull market where things have been moving up. I mean, when the whole market's just been, was in a raging bull for as long as it was, and RNG is doing this, it's definitely not hot. And let's zoom in a little more here, because a couple more things I want to point out. You look at this earnings report right here, and they estimated that they were going to lose 59 cents per share. 59 cents per share is what they were estimating they were going to lose, but they didn't lose. They had a great earnings report. They actually made 36 cents per share. Isn't that great? And you can see it gapped up, and then it came crashing down and hasn't even looked back. And you look at the top there, about 315 or so, and where it's sitting now, that's more than a 40% drop in the last month. So that's earnings, man. Those are volatile, those are unpredictable. And here's, exhibit A on why we at Tradeway, we do not recommend trading over earnings, because it is so volatile. You don't know what's going to happen. You can have a good earnings, and it did move up here. You can see it did gap up, but then it came crashing down. As I was looking more at this stock, I found something interesting. See how on charts by Tradeway, it's really nice how you have the green E and the green E. Well, when it's green, that means that they beat their earnings estimates. When it's red, that means that they did not make the mark. And you look at this stock over the last year, and 4 times in a row, they beat it. So here, they were expecting to lose 18 cents. They made 29 cents. Here, they're expecting to lose 34 cents. They made 27. Same thing here, expected to lose, and they made. When you have 4 earnings reports in a row where you obliterated the estimates, like, yeah, we thought we were going to lose money, but we made money. And it still keeps coming down and keep coming down in a hot bull market overall. That stock is not hot. So that is our not stock for the day, RNG. I don't see any questions or comments in there at this time. If you did put them in there, then I'm still not seeing them for whatever reason. So we will get that worked out. I'll definitely be checking afterwards. But, if no one had any questions or comments, that's okay too. We can do that next week. But that's it for today. So our hot stock is Apple. Our not stock is RNG. And the market overall still kind of has some question marks. So I'll be here with you next week on the 16th. That will be the last Stock Talk Thursday of the year. Take a couple week break, and then we'll be back with you in January. But I'll still be here next week, and I'm looking forward to it. Well, let me stop sharing, and we'll see you guys next week.